I actually think trade optimism is kind of an excuse. And I've said this for some time because if trade optimism was really the reason why we were going higher, we would actually back off when there was no news or back off when it looked like there was um, something negative happening. But we really haven't. We've had very few downticks, essentially since the Fed announcement at the end of October. Um, let's unpack the reasons. First of all, I'm going to say it's seasonal. Markets, we've all heard about, sort of the best 6 months and the worst 6 months effects, and that is sometime if you invest sort of October through April, that's basically when most of your returns occur, as opposed to the other 6 months of the year, which tend to be treading water. So I think you are seeing some seasonality. You're also past mutual fund year end, and so I think there was some pressure in terms of capital gains being taken or avoiding capital gains being taken. That was lifted after October ended. Um, I'm not going to say the trade optimism is a red herring. That's not fair. But I'm taping this Tuesday afternoon after the president had his um, somewhat anticipated speech at the New York Economic Club, and the market had risen throughout the morning on optimism that the president would say something good about China trade. Um, During the speech, the market kind of declined a little bit because he really didn't say anything. It was nothing we hadn't heard before. It was, sort of an upscale version of the usual stump speech with some extra heaps of negative sentiment thrown at the Fed. But then afterwards, the market resumed its rally, at least at the time we're taping this. And so to me, that shows you that the trade optimism, while it's a nice backdrop, it's not really the cause. Um, Besides seasonality and other causes, just we've had 3 rate cuts. People people have learned the lesson. Don't fight the Fed. Now, I've said many times, don't fight the Fed is important, but you don't have to necessarily jump on board either. But the Fed has made it, fairly prohibitive to keep cash, whereas, just a few months ago, three rate cuts ago, cash was providing a better alternative. We've also seen the interest rate curve renormalize, which is perceived as being, good economically. So you're seeing a lot of money that had been either in bonds or on the sidelines flow back into the stock market. I don't think the fundamental picture has changed that much, but sentiment goes a long way. And so if trade optimism is the excuse that people are using to push the market higher, so be it. I am a strong believer in don't fight the Fed, don't fight the tape. So that element is playing in here. That's why I think the path of least resistance, at least in the short term, remains higher and may remain so through the end of the year. There's no obvious resistance levels because we're trading at new highs for most of the major indices. So the trend is your friend for now, but there's just something nagging in the back of my mind that says it's not all as good as it looks. So I would say trade along with the market. Don't fight it, but just look around for things and worry that if you're looking at a cause that may not be evident in reality, that you may not want to just go chasing something that's not there. Um, Trade accordingly. Always keep your risk in check. But in the meantime, I do think the path of least resistance is to the upside.